This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. So I've had a few questions regarding trading inside of a range. To my knowledge, I think I've only done one video in the past couple of years on trading in a range. So I'm going to do another one today. Now, the reason why I don't do those videos is because I don't really trade like that anymore. I tend to look for I look through hundreds and hundreds of charts, really thousands of charts, and identify one of two patterns. I like to buy low ADX breakout patterns, and I like to buy pullbacks in strong trends based on strong ADX. And I use MACD as a timing tool. I use the moving averages to help with the timing, and I like to do it in multiple time frames. Now, what I'm going to suggest for you is that if you want to trade in a range, like trading range type plays, you have to add a few things to your toolbox, in my opinion. And I'm going to show you that as we get into the charts. And I also think you're going to need to have a different mentality about how you go about putting the trades on. I mean, most of the time when I'm putting trades on, I don't have a hard target in mind. It says, okay, if I buy it here and I sell, if it gets to this level, I'm selling the whole thing. But if I'm going to trade in a range, if I'm going to play a range trade, I'm definitely thinking that way. So the targets become incredibly important. How you go about figuring out those targets are also important. So I want to go through that. Let's go ahead and get into this example. Now, I'm just using the spider. Now, one of the things that I think is really important about this is that even though I'm doing a trading range play, you do the same thing. You have two time frames. The higher time frame is going to define the trade. Okay, you don't find a trade on a micro time frame and then figure out how to do it in relation to the higher time frame. Do it the other way around. Start with the higher time frame. In this case, I've got a daily on the right and an hourly on the left. And what I want to do is I want to define a high probability area that looks like a spot where we could get a pretty good rally, some kind of support. Now, it won't show up as either of the trades that I suggested. It's not going to be a low ADX pattern, and it's not going to be a pullback in a strong trend. And if in a pullback in a strong trend, meaning a pullback to rising moving average environment, if we don't have either of those in place, then I would consider anything else than that a trading range type of a play. So let's just define this. So I've got the daily on the right, and we had pulled back from an all-time high on this decline, and it was pretty violent. Notice how we got pretty harsh selling here that went right through the 18 MA on this daily chart. But if you notice what happened, we came down, we broke the 18, and then we came down and we broke the 40. So the 18 was rolling over, and the 40 was rising. So when we got to this bottom down here, we were actually, we still had a rising 40 and we had a declining 18, and the 18 was above the 40. So we don't have any kind of a trend in place. This is not a trend signal to the downside, and it's not a buy signal to the upside using the strategies that I typically talk about on this channel. So if that's the case, then I've got to be looking for other reasons. And what I've done is overlaid a zigzag on both charts. I think if you're going to trade, if you're going to do range type trading, I definitely suggest having a software that allows you to do the zigzag. And I don't do a really tight zigzag. If you notice, it didn't reflect this intermittent rally here. It's just kind of the bigger swings. And I do that on both time frames because I'm trying to identify kind of where the key levels of support are. Now, if I zero in on this low again, I've actually overlaid, you see this jagged line, that's the 18-week line that it's pulling back to. Now, it's not a pullback on the weekly, and let me just pull up the weekly chart. And the reason why it's not a pullback play on the weekly is because MACD did not confirm and ADX is very weak. This is not a trade on this pullback right here. But if we go back to the daily chart, I have support from the 18-week, which is still rising. I actually come down to the MACD zero line right at this low down here. So that's two areas of support. And then finally, I can pull up the fib levels and I can see I am at the 50% retracement right at that low. So I've got a lot of things working for me, even though I don't have a low ADX breakout and I don't have a pullback to a rising 18. I actually broke the 18 and it's rolling over. Now, so now I know I've got a pretty high probability support area based on three different things: fib levels, 18-week, and the MACD zero line. So with that, now I'm going to go, I've got this circled area, I'm going to go to my lower time frame for entry. Now this becomes pretty interesting because as we see, this keeps making lower lows and lower highs. We have a down channel basically that has formed. We do have a benchmark low in MACD that was made on this bottom. And yeah, we've made a couple of new lows and it has not been taken out. So there's no consistent format where we're continuing to make higher lows, but this low is a benchmark low that isn't being overtaken. So that's one thing that we have in our favor, but it's not enough to really make a trade. The other thing that I would tell you is that I'm switching this to single time frame so you can see this. So the spider is moving down. I mentioned this, the MACD is not making new lows, but it's not a signal by itself. And really, when I look at the ADX, it's a little deceiving because look at what happened here. We made a lower high, and then we made a lower peak below 25. That's based on the selling strength, right? This is the decline. It's declining, and the ADX is making lower peaks, but then we get this big move here that makes you think that, wow, this strength is actually increasing here. But it's deceiving. It's deceiving. And that's why we have to know how this is calculated and what's causing this. Because, and what I want to do actually, I just want to take the ADX line off here for a second. So I want you to see. So look at what this did. We had a peak here in the sellers, and then we made a lower high in the selling strength, another lower high in the selling strength, and another lower high. Now, the ADX was rising here. But at this bottom, the DI line was actually pretty weak. The reason why the ADX was going up is because there was a lot of separation. The buyers were really weak, okay? But we didn't have any real selling strength either. The selling was was really weakening. And also notice right after that, we dropped below 25 and the sellers lost strength enough to get the DI line below 25 right around this low down here. So we had that. We know that we had diminishing strength in the sellers here. And obviously we have this, if we switch back, we have these three lines that are showing up. I took off the 18-week, but I mean, we've got the 18-week, we've got the MACD support from the zero line, and we have the fib level. So I can go down to this level and look at this on an hourly and look at what the bars were doing. Now, if we start to compare, if we look at this bottom, look at what happened at that low. Look at how big a red bar we had and then another big red bar. That low was just not that important. And yeah, we came back up through it, but really, to me, that's not a trigger low. It didn't have anything around it that would give me any kind of a sign that I'd want to do anything. But if we look at what happened at this low, look at that bottom and look at the way, and this is how you have to do this if you're going to trade intraday. You'll be able to do it, not intraday, but trade in a short-term, like range trading. You have to only watch a couple symbols and look at what this did. It came down to this low and found support with a tail. Then it had an inside bar and made another new low, but didn't close at a new low, right? And then finally, we had another bar that went below and then closed to the upside. We had a first green bar. We had red bar, red bar, red bar, red bar, red bar, and then a bottoming tail close in the upper third of the range that ends up turning green. So when I see that, if I see something like that, and I'm watching these closely, I know that I'm looking at this area and I'm looking at 450 being really key support, and I get a reversal, then I'm willing to trade that pattern. Now, just so you're aware, I mean, I'm not looking for a big trade here. I'm just going back up to the prior swing high. That's the target area, somewhere around 460. So if I get in somewhere around here, I'd probably be willing to do that at the close on that reversal. But say somewhere around here the next day, I'm in, I'm using this as my stop. Let me just clear all this off. So I'm in somewhere in this range here, and my stop goes underneath this low here. And my target's up here. Now, I have to figure out how much I'm risking. And then if I can't get 3 to 1, sorry, let's make that a little easier. 3 to 1 in reward to risk, then I don't do the trade. There's no trade. I only do ones that have 3 to 1 or better. If I can only get 1 to 1, 1.5, 2 to 1, no matter how good it looks or high probability it is, I'm not doing it. I'm only going to do these type of trades when I can get 3 to 1 inside of a range from there to there. Now, if I can get that and do that consistently over time, I'm going to find out that I think if you start doing the math, do 3 to 1, go to an Excel spreadsheet and do like 20 trades with 3 to 1 as your risk reward. So if you make money, you make 3 times what you lose, and do 40% wins and 60% losses. See how you end up. You end up making money, only being right 40% of the time. I think it actually works at 30%. I'm not sure exactly. I haven't done the math in a little while, but I can tell you that 35% to 40% of the time, if you're right, doing these type of trades with 3 to 1, then you're going to be surprised. You can make pretty good money over time. So anyway, that's just an example of how I would go about trading in a range. Wanted to make sure I covered that. There is another trade coming back up towards this high when the ADX line, see all 3 DI lines are low. And notice how the moving average lines are not trending. That is not, so that's declining. We're coming up against a high. That is resistance up there. So you can play on the smaller time frame for the same kind of reversal pattern, right? We go to a new high, and as soon as you come down through that low, you're looking for signs that we've got to move down, but we're only playing for a move down to 460, 461, something like that. It's got to be 3 to 1 if you're going to play it like that. But these are the types of things that I think I'd be doing if I want to trade intraday. Use that zigzag. I think it's a huge advantage. Go ahead and post any questions or comments, and we'll see you next time.